The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Well, should I take a look and see if the Dow is still? Yeah, the Dow is still up 57.87, even as I said it before I got the tout in. But let's see what's going on in the other markets right now. So we'll check those out for you as well. The 10-year Treasury down 2 basis points, yielding 2.77. Mortgage-backed securities are up 23 basis points. That means interest rates are down a bit this morning. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. 30-year conforming rate mortgage, 5.589, down a little bit. These are yesterday's numbers. 30-year jumbo, 5.192, up a little bit. 30-year FHA loan, 5.522. And the USDA, that's our rural loan. Rural loan is the USDA loan. That one was yesterday at 5.473, and the best loan on the market for those that earned it. The VA loan, 5.213. 5.213 right now is where the VA loan is sitting. So Alex is here. Good to see you, Alex. Let's talk about why that is happening. Why are we looking at, whoops, I got to take that off the screen. Why are the markets doing what they're doing? Well, got a lot of news. So first off, I talked to you in the last segment about the Federal Reserve and what they're doing. They conclude their two-day meeting again. Nick Timiraos told us that the Fed is going to hike 75 basis points. He's the new John Hilsenrath. He's the one that the Fed leaks to so that he can leak out what the Federal Reserve is planning on doing so the market does not get spooked. So that's going to be today at about 11 o'clock our time. Pending home sales. This was the one that was painful. Pending home sales measures signed contracts on existing homes dropped 8.6% in June. Ow! Much weaker than the 1% decline expected, and sales are now down 20% year over year. No doubt, higher interest rates are impacting demand, especially in June when rates reached their apex. We know that rates have improved since then, but this was a weak report, clearly shows that activity is much weaker. The MBA released their mortgage application data for the week, showing that purchases were down 1% last week, or down 18% year over year. And I'm not going to tell you their interest rates because that's old data. Refinances decreased by 4% last week and are now down 83% year over year. Refinances now make up 31% of all transactions. Why do I talk even about refinances? Well, the beauty of refinances we're seeing, as I've told you before, refinance now, consolidate all of your debt now, get the debt out of there. Even if you have to increase your interest a little bit on your first mortgage, look at what your household blended interest rate is, because now you're not married to the mortgage. Next year, when mortgage rates are lower due to the recession, and mortgage rates generally do go down during a recession, at least historically they always do, but I can't predict the future. But when the interest rates go down, you restructure that loan and you don't have the cash out refinance hit that goes into pricing. We talked about pricing yesterday. So pricing will be better, plus you don't have that extra hit, and you get rid of all that debt. That'll help your FICO scores go up. Remember, if you've got that utilization rate of your revolving debt below 10% or below 30%, that's going to count for 30% of your FICO score. 30%. The only thing that accounts more for your FICO score than the utilization is your payment history. So think about all that. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.